The euro and the pound sterling are resisting pressure from the US dollar. The greenback has failed to gain in value against both currencies amid the expectations of the Russia-Ukraine conflict results. Meanwhile, demand for the US dollar remains high thanks to the upcoming key interest rate hike by the Fed. The European Central Bank is still considering monetary policy tightening. However, the extremely high inflation rate may force the ECB to take decisive measures. Notably, gas prices in Europe surged once again after Germany froze the Nord Stream 2 project. This may lead to a new wave of inflation risks. In addition, Qatar will hardly supply additional gas to Europe given its long-term contracts with the Asian buyers. That's why now the United States and European countries are trying to find the necessary amount of gas to proceed with the sanctions against Russia. The fact is that Europe greatly depends on energy supply from Russia. It seems that German Chancellor Olaf Scholz has taken a knee-jerk decision that may badly hit the eurozone. What's more, German consumers do not expect a positive dynamic in the inflation rate. Thus, the Consumer Climate Index for March tumbled to minus 8.1 points, being well below the forecast and reaching the lowest level last seen 9 months ago. In the light of what has happened, traders remain puzzled. The euro-dollar pair has been trading sideways for the 8th day in a row. It's obvious that investors are not concerned about the current geopolitical situation. Some of them suppose that the conflict has just begun and major historical events will occur later. Importantly, foreign ministers of Russia and the United States have cancelled their meeting. To boost the market activity, the quote should approach the limits of the range, thus providing traders with the entry signals. In other words, traders could plan short positions below 1.1280. Conversely, if the pair settles above 1.1404 on the 4-hour chart, it's possible to consider long positions. The pound-dollar pair also stagnated within the range near 1.3600. Even comments provided by Bank of England Governor Andrew Bailey failed to change the market sentiment. And he said that while he believed the spike in inflation would be temporary, its climb could be higher and last longer. Traders of the pound-dollar pair may also apply a breakout strategy. If the price consolidates above 1.3642, they will have an excuse to open buy orders. At the same time, it's not recommended to open sell positions at the moment. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you!